From top-ranking table tennis star to savvy financial advisor, Zhiyang's journey in the world of mortgages and property investment is nothing short of inspiring. Get ready for a masterclass in building financial freedom that proves numbers aren't just about spreadsheets, they're the blueprint for building wealth. Zhiyang isn't your typical advisor. He's helped thousands of Mortgage HQ clients understand their options. Z, as he's affectionately known, has used Mortgage HQ's proven 3 C's strategy and used the spreadsheets to help him choose and complete a property development project. So today we're looking at 9 Tuakana Street in Point, England.
Yeah, thanks, Andrew. So how the project's going, we're sort of 85% of the way of completion. So, all the structure's basically complete. We're just waiting on getting the kitchens and the bathrooms ready. So yeah, we're basically almost done. In terms of how we chose that project, that was a bit of luck, I must say. Because at the time, I just started at Mortgage HQ, and
So this is around 2019.
2019. That's the one. Yeah. So I guess looking at a lot of case studies from different clients, seeing what they're doing, I understood that buying a land bank is definitely a really good way of creating wealth because it gives you options. Right?
Yeah.
So,
and by land bank, we mean properties that have development potential or potential to add value.
Correct.
So in terms of where the property is, so it's 9 Tuakana Street, Point, England. Purchase price was
$930,000.
And how did you buy that property? Was it auction, negotiation?
Yeah, so that was actually an auction. It was a mortgagee sale. So at the time, we didn't have too much time to do any due diligence. It was literally a mortgagee sale. We had 5 days to take action, and we went to the auction with a price in mind. And fortunately, we paid less than what we had planned for.
Yeah. So the purchase price $930,000.
Yeah.
What do you think the market value of the property if it had a full cycle to run with an agent and a full 90 days to sell?
Yeah, I would say easily over $1 million.
Yeah.
At the time, it was before the COVID boom, so I would say $1 million to 1.1 at the time.
Yeah. So a bit of equity on the way in because you were able to act quickly.
Yeah.
So you've bought the property. What due diligence did you do before going unconditional?
Yeah, so obviously auction, you have to go unconditional. So you have to do all your due diligence beforehand. All I did was speak with an architect, understand my options, figure out what we could actually build on the site. But at the time, we didn't think too much. We didn't have any plans to build immediately. It was just a land bank play, I would say.
Okay, so tell us about the property, the land size, what was there originally?
Yeah. So the land, I believe it's just under 900 squares. So it's at the end of a cul-de-sac. And the original property was like a 1970 state house, very small, 3 bedrooms.
What condition was it in?
It was actually in a livable condition. It was a family that lived there beforehand. So it was a rentable estate.
Yeah, Healthy Homes compliant?
I believe so.
But maybe.
Maybe, yeah.
Oh, I had a quick look. It looks like it backs onto a park and so away from the main road.
Yeah.
So you've purchased this property, continue to rent it out for a few years.
Yeah.
What was tell us about the numbers.
Yeah.
For what was there originally.
So originally, obviously on a $930K purchase, during 2019, the interest rates were sitting around the high 3s. So when we rented it out, it wasn't too bad at the time, where it was negatively geared, but
Not by much.
Not by too much. Yeah. And obviously, around the high 3s. So when we rented it out, it wasn't too bad at the time, where it was negatively geared, but
Not by much.
Not by too much. Yeah. And obviously, during the COVID times, rates went down even more, but then 2022 rates picked up. So the last couple of years were a bit more painful on the repayment side.
Yeah. So you've taken I think it's 885 square meter property, by a piece of land with one small house on it.
Yeah.
And you've developed it into 6 properties,
6 units.
6 units.
That's right. Yeah.
So how long before you started working on that?
Yeah, it was probably after 2-3 years. From the purchase, I started looking into it. So at the time, it was just meeting with different consultants, different professionals, getting their perspective on the project. So
Yeah.
yeah,
And when did you break ground on beginning that development?
yeah. I guess when we first broke ground, that would have been beginning of 2024.
Yeah,
So
yeah.
yeah,
So around about 5 years of holding and owning the property before you got into it.
yeah.
So tell us about who helped you along this journey. How did you pick these specialists to work with?
Yeah. I guess when you're doing a project like this, I think it's really important to have a strong team. So obviously, getting your consents, your paperwork ready, that's really, really important. Choosing the right team, choosing the right architect, that's really important as well. So
Who did you work with?
I work with Architecture, which is one of the referrals from Blandon's.
Yeah.
Yeah.
And so how do you decide, you get the architect to help you scope out what's going to fit on the property?
Yes.
Did you rely on the architect's drawings to make a decision on what to build, or did you rely on a spreadsheet, or what did you change through that initial drawing phase?
Yeah, I guess with a good architect, what they'll do is they'll present you with options, just like how we do as well.
Yeah.
So they'll present you with options, and then you might have 2 or 3 iterations of what you can do with that site. You might then go away and have a chat with some agents to see what's going to be the best product for this particular area.
Yeah.
And obviously, chatting with agents, you also need to chat with builders and developers who will have a better understanding of the price.
Yeah, and that's one of the benefits of using the 3Cs calculator spreadsheet. They're really important. If you want to learn more about the 3Cs, have a look at the links above. Well, it looks like you've done, was it 4 2-bedrooms or three? No, tell us the breakdown of what you decided on.
Yeah, so at the time we had 2 options. We had option 1, which is a row of 7 2-bedroom units. Option 2 was having 2 blocks of 3 units on each block, and I'd have 4 2-bedroom units, 1 4-bedroom and 1 3-bedroom. So I chose with the latter.
Yeah, and what helped you make that decision?
To be honest, at the time I wanted to create something that I was proud of, and seeing a lot of these 2-bedroom developments going around, I wanted something different. So I just chose the latter option.
And so was that more financially beneficial to go with what you've decided, or you've focused on?
Not necessarily. I think the numbers were quite similar. In fact, I think it may have been a little bit better doing the block of units, the block of 7. Yeah. But at the time, I think it was marginally better, so I didn't feel like I needed to overcapitalize.
Yeah, well, making that decision a year or 2 ago when you did versus what the market is shaping like now, I think having a couple of bigger properties makes a lot of sense in that area. And if you're going to sell to first-time buyers and a family, I think it was a consideration. So, talk us through some of the financing. How much extra over and above this purchase price did you have to borrow to get this construction going?
Yeah, I guess when it comes to these developments, what you generally want to do is you want to fund a lot of the consultants yourself, getting the resource consent, building consent, EPAs. If you can fund those yourself, and once you have those documentation and a security that you can bring into a bank or any secondary lender, that's going to be a strong application.
Yeah.
Rather than you needing to borrow money from the banks to get the documentation.
Yeah. So you guys, as a family unit, are bringing in a strong equity position.
Yeah.
But you still ended up deciding to borrow, what was it, around $3 million from ASB to finish this?
No, I think in total it would have. I would say the purchase price was $930.
Yeah.
I borrowed $1.5 million from the ASB.
Yeah.
So there's still probably $500,000 of cash input that I put in myself that to do with the consultants.
Yeah.
Obviously they didn't cost that much, but I covered some other costs with my own equity.
Yeah. And so what's it looking like before you started the project and now you're getting close to finishing? What is going to be the profit on the equity you've put in?
Yeah, I think I'd say total cost, including all the expenses like interest and holding costs along the way, we're looking at roughly around high twos, maybe 3 million.
Yeah.
I guess the in value would be around 4.5. We just got a valuation done not too long ago.
Yeah.
So in terms of net equity gain, that's around 1.5.
Yeah.
Slightly less. So that's not 1.5 in the bank.
Yeah.
That's 1.5 on paper.
It's a paper profit at the moment, and you guys bought with the intention of holding these properties, and it's a long-term play for you.
Yes.
So we're getting closer to a point where the properties are going to be finished.
Yeah.
They're going to be rented out. So we had a brief chat. We're going to hold these properties and rent them all out, and probably get around $4,000 a week of rent across the 6 properties.
Roughly, yes.
So 200,000 of cash flow coming through, and that will, is that going to cover your finance costs?
I think more or less, yes. Obviously, it wasn't 100% financed, so our debt on this project is, you're looking at around like a 50-60% LVR overall. So it would cover it. It's not going to be too attractive in terms of cash flow. It's more of an equity play.
Your net return might not be that high, but you've had such a big return on the equity side of things that over time you might cycle some of these properties out of the portfolio. But at the moment, you can control the whole site.
Yeah.
You get efficiencies because you've got 6 rentals next to each other. It's easier to manage, and there's nothing to stop you using some of that equity uplift in other projects, right? You can use it as security.
Yes.
So what have you learned going through this 5, and it's going to be 6-year process? It's generated you well over what sounds like $1 million of profit. There's no tax to pay on that because you're outside your bright line. And what would you do differently next time?
Obviously, there's always going to be a lot of lessons on your first one. I guess what I would do differently is understanding what the best product for the market would be. When we initially approached the architect, I guess there were a lot of things where the architect suggested where, it's great. It looks amazing, but it may not necessarily be cost effective.
It's called overcapitalizing, right?
Correct.
You guys made some pretty properties that might not needed to be so pretty.
Exactly. You might spend a lot more money on, for example, we had internal gutters, right? So maybe some cladding that we needed to change, the fence we needed to change. So along the way, I guess the biggest delay was going back and forth, getting the right design. So I guess getting it right the first time is really important, because once you already have the consents and you want to make amendments to it, it's going to cost you more money. It's going to take more time. So I think speaking with getting your architect on board with your builder at an early stage, I think is really important, because the architects, they're not in the business of building. They might not know exactly how much a material will cost, and they would probably want to design something that's good for them as well, for their portfolio.
Right. Something that they are proud of.
Exactly.
Most architects don't want to do Lego blocks, right?
Exactly. But there are always budget constraints from the owners.
And the team that you work with, I think people underappreciate how valuable an agent can be, or agents, in terms of appraisals and guidance. Talk us through how you've been working with some of the agents to help you make decisions.
I guess agents are really important. They're worth their weight in gold if you get a good one, because they have a really good deep understanding of the market. So if you're looking at doing a development, it's always good to have an agent on board at an early stage. you want them to give you an appraisal on what you want to build or your vision of what you want to build.
Yeah.
Because at the end of the day, it's all about numbers,
Yeah.
as you know, right? So the agents, well, the fewer variables, the better. And agents are there to, sort one side of the variables.
Yeah. Who do you want to name drop that was helpful?
My friend, Freedon,
Yeah. What agency?
Barfoot and Thompson.
Cool. So what was the thing that made you the happiest, or what was like a real good part about how this deal unfolded? Do you expect it to go as well as it has, or?
Yeah, I guess seeing the finished product, because it's always different, seeing the plans looks so nice, but then, there's always that worry that doesn't work out. But then, yeah, I guess seeing the almost finished product and having that relief is the best part.
Yeah. Oh man, I'm super stoked for you. I'm guessing the next project's not going to be a 5 or 6 year project. It might be a 1 year project.
Yeah.
And proud of you, helping clients do this and doing it yourself. And now, if people want to talk to you about their property development, how do they get in touch?
Yeah, so obviously all my details are on the website, mhq.co.nz. Yeah.
And we'll see if we can get an example sheet in the description below. But the best way to get access to this side of this kind of information is to join the Property Formula Workshop and book a call with Danny. She can walk you through how to use these spreadsheets yourself, and you can learn what you need to learn if you want to do developments like this. Now, it's great to work with someone like Z that has done it before, but he's really hoping if you're coming to him, you've spent a bit of time and money and energy yourself, getting yourself educated on the basics. So when you're talking to a financial advisor, it's about the specifics, and they're not trying to teach you how to use a spreadsheet. So thanks for joining us here, and look forward to the next project.
Thank you, Andrew. Appreciate it.